Well, the ceasefire is in effect and the shooting has stopped, sort of. And the Las Vegas data is telling its own story. Now, if you own a home in Las Vegas right now, the next few minutes could change how you think about your next move. Let me show you exactly what 4 months of real MLS data says is actually happening, why mortgage rates are the key to understanding all of it, and what two very different outcomes for this conflict could mean for your home value. Now, just a quick note before we dive in. I'm a real estate agent, not a foreign policy analyst. So I'm not going to talk about the war itself or make this a political message. I'm interested in what it means for your home value, because if you own a home in Las Vegas right now, you need to understand both sides of what could happen next. Not the panic version and not the everything is fine version, but the data version. So let's start with rates, because without this piece, nothing else makes any sense. You see, the day before strikes hit Iran on February 28th, the 30-year fixed rate was at 5.98%. The first time it was below 6% since 2022. Now, buyers who had been frozen on the sidelines for 2 years were finally starting to move, and we were seeing that activity in the market. Then the bombs dropped. Oil spiked, inflation fears came back, rates climbed to 6.64% by late March. Now that's a 2/3% jump in about 4 weeks, okay? So here is why that matters. Every 1/4% move in rates changes a buyer's purchasing power by roughly $10,000 to $15,000 on a $500,000 home. So a 2/3% spike is the difference between a buyer who can comfortably afford your home and one who is stretching just to make it. Now that hesitation shows up directly in the MLS data that we're going to talk about here in a minute. So then the ceasefire was announced on April 8th. Oil dropped 9% in a single day, rates briefly pulled back, then the stalemate set in. The blockade continued, the strait closed again, Trump rejected the latest counterproposal, and rates climbed back towards 6.5% and above. Now, the MBA's deputy chief economist said directly this week that the ongoing conflict continues to push rates higher. We are now in the third wave of rate pressure from this conflict, and you can see every one of those waves in the Las Vegas MLS data. So here's the 4-month picture from the actual numbers. January closed at 1,445 single-family homes, down 8.4% year over year. February closed at 1,614 homes sold, down 9.4%. So inventory was climbing a little bit. Months of supply were rising. The market was already softening before the war started. Not everything you're seeing right now is all the conflict's fault. Some of this recalibration of the market was already in motion prior to that started. Now, one thing before I go on any further, we're looking specifically at single-family homes in the Las Vegas and greater area MLS, okay? So back to the data. March closed at 2,288 homes sold. That's up 6.8% year over year. That was the strongest month of 2026. Months of supply, the monthly supply of homes compressed to 2.8 months, and prices held at about $480,000. But here's the context that most people miss. March closings reflect contracts that were signed in January and February before the bombs dropped. March was the last echo of pre-war momentum. Those buyers were already under contract when the conflict started, and that's part of the reason why March looks so strong. The rate impact had not yet landed. So then comes April, the first month where the rate spike and buyer hesitation actually show up in the closed sales data. You see, April closed at 2,110 homes, down 2.9% year over year. The median price came in at $473,875, down 1.3% year over year. And months of supply ticked back up to 3.2 months. Now, those contracts that were signed in March, right when buyers were absorbing that 6.6% rate and genuine uncertainty about what was coming. Now, here is the number that closed sales do not show you, and this is the most important data point in this entire video. Pending and contingent contracts in April. Buyers actively under contract right now came in at 2,760. Now that's up 8% from March. It nearly matches the February peak before the war even started. So rates spike, buyers pause. March pendings dip to 2553. Then April comes, rates still elevated, stalemate still in place, and pendings climb back up to 2760. So the buyers who were paused actually came back. The pipeline is rebuilding itself even while the headline numbers look kind of soft. Now that is not a crashing market, that's a market catching its breath. Now if you are a homeowner trying to make sense of what this means for your situation, feel free to reach out. I'm happy to walk through what the data says about your property. No pressure, just straight answers. There's a link in the description if you're interested. Now let's talk about what happens next, because the next chapter has two very different endings, and you need a strategy that works in both. Scenario number one, the war resolves or significantly de-escalates. If the strait reopens fully, oil normalizes, inflation fears recede, rates will follow. Now we saw a preview of this in early April when the ceasefire was announced. A full resolution would accelerate that rate relief significantly. Fannie Mae and the MBA both project that rates could drift towards the high fives, drift down later this year if conditions normalize and we kind of finish down the path that we were on before the war started. Now every buyer sitting on the sidelines comes back at once when that happens, not gradually, all at once. And the pending data tells us that they're already positioned to respond quickly. The sellers that are already on the market when that wave of buyers arrives, of course, they capture the demand because they're on the market ready to sell. The sellers still preparing, watch it pass, unfortunately. They're a little late to the game, unfortunately. So here's scenario two. The conflict drags on. That means rates stay under sustained pressure. The modest April cooling, which is down 2.9% in sales volume, down 1.3% in median price, becomes the new trend rather than a single data point. And months of supply creep higher. Sellers waiting for the right moment find the right moment, just keeps moving. The goalposts just keep moving. Now, one distinction worth making here, single family months of supply is 3.2, still under 4, still seller leaning. Condo months of supply is 4.8, approaching more of a balanced territory or even tipping a little bit more towards a buyer's market. Condo median prices are down 4.2% year over year. If you are a condo owner, the risk in a prolonged conflict scenario is meaningfully higher because you're already hurting compared to a single family homeowner. Okay? So in both scenarios, the data points in the same direction. Sellers that are already positioned win when the wave arrives in scenario one. Sellers who wait longest absorb the most pressure in scenario two. Either way, you should move with intention now, not after the picture becomes clearer. Because the picture never becomes as clear as people want it to be. Markets do not send clear signals. They transition. And the sellers who come out ahead are not the ones who predicted the future correctly. They're the ones who understood what the market was doing and positioned themselves accordingly at the right time. Now here's what the market is doing right now. Rates are elevated. Prices are down 1 to 1.3% year over year. That's a correction, not a collapse. And more than half of single-family homes are selling within 30 days. Pending contracts are rising. Months of supply is still under 4, and it's not crashing. The sellers sitting are mostly the ones who are priced for 2022 and have not adjusted. The sellers closing are the ones who came in with accurate pricing, strong presentation, and a real marketing plan. Now in a selective market, that is always the difference. So that is what is really happening right now as a result of the war in Iran. And if you're a homeowner thinking about selling or just trying to figure out your next move, reach out. I will help you map out the smartest approach for your specific situation based on today's market. The link is right below the video. I'm Justin, no BS, just clear data. I'll see you in the next one.